Breaking news out of the global financial community has IQD holders across the world celebrating today. In an unprecedented development, all denominations of the Iraqi dinar are now reportedly being accepted for exchange, triggering waves of optimism and speculation among currency investors, market analysts, and regional economic stakeholders. This pivotal update, though still emerging, has already begun reshaping conversations surrounding the long-anticipated revaluation of Iraq's national currency. For many, this is being viewed as a major validation of their patience, belief, and long-term financial strategy. The news broke early this morning, sending social media channels and private investor forums into a frenzy. What had once been a slow trickle of rumors and vague statements has now reportedly solidified into a concrete policy shift. Multiple sources within financial circles are confirming that all note denominations, ranging from the smaller 50 dinar notes to the larger 25,000 notes, are being treated as valid, tradable currency without exception. This includes acceptance by regional financial institutions, international Forex desks, and certain private exchange platforms. While the news is still being verified in parts of the market, the psychological impact is undeniable. For over a decade, IQD holders have speculated about Iraq's path forward. Many were told to hold onto their notes as the country rebuilt after decades of conflict, internal instability, and political reconstruction. Skepticism ran high, especially as various fake news reports, exaggerated claims, and misleading financial forecasts diluted public trust. But with this latest development, that long-standing uncertainty seems to be giving way to tangible market-based action. And for the community of global dinar investors, particularly those who invested early and held through years of doubt, this moment is nothing short of historic. The significance of all denominations being accepted lies in what it suggests about Iraq's monetary policy. Traditionally, when a country undergoes currency reform or revaluation, older or smaller denominations are often phased out or heavily restricted. The move to allow all denominations signals a potential stabilization of the Iraqi economy and a growing confidence in its currency's future. For central banks and private investors alike, this is a notable shift. It suggests Iraq may be preparing for a more open engagement with the international financial community, possibly aligning itself with IMF standards and modernized currency valuation methods. More importantly, the broad acceptance of all note types offers logistical simplicity to investors and institutions. It removes ambiguity, reduces risks, and streamlines conversion processes. Investors who have long held on to older or less commonly circulated notes now find themselves in a stronger position. No longer is there a need to worry about whether a specific denomination will be honored or not. This universality of acceptance levels the playing field and could very well accelerate liquidity in the market. As expected, the reaction among longtime dinar holders has been electric. Across online groups, celebration posts, videos, and live streams are pouring in. Many are recalling the moment they first purchased their dinars, the skepticism they faced from peers, and the countless hours spent researching Iraq's evolving political and economic landscape. For them, this development is not just about monetary gain, it's about validation. Years of doubt, accusations of being misled, and enduring market silence have suddenly been met with one of the most concrete signs of movement yet. But the news is not just resonating with private holders. Financial analysts are also beginning to take note. Some are urging caution, reminding the public that while the acceptance of all denominations is a strong indicator, it does not automatically guarantee a full revaluation or immediate rise in value. Others, however, are pointing out that such a move would be unlikely unless Iraq was preparing for a more significant shift in its monetary structure. The timing, they argue, is particularly interesting. With geopolitical tensions easing in certain parts of the region and with oil production and exports stabilizing, Iraq may be seeing a window of opportunity to reintroduce itself to the global market as a viable, stable financial player. Still, much remains uncertain. There has been no official statement from Iraq's central bank as of this hour, and until a full governmental declaration is issued, speculation will continue to fill the gap. Some insiders suggest that the acceptance of all denominations may be a precursor to a formal adjustment in the currency's valuation, possibly tied to upcoming budgetary moves or foreign reserve shifts. Others are more cautious, seeing this as a technical change meant to clean up internal inefficiencies without signaling any larger revaluation plans. Regardless of the intent, the impact is immediate and substantial. Currency dealers are reportedly updating their platforms, with some temporarily halting IQD trades to recalibrate their exchange rates and protocols. Others have reported a sudden spike in demand for lower denomination notes, driven by buyers hoping to diversify their holdings ahead of what they believe could be a larger currency shift. Meanwhile, financial content creators and economic influencers are rapidly putting out analyses, some cautious, others optimistic, reflecting the full spectrum of sentiment in this highly charged moment. Among the general public, reactions are equally mixed. While holders are celebrating, skeptics continue to urge restraint. Past experiences have taught many to wait for firm policy changes before making bold assumptions. And for newer investors entering the IQD space, today's development is both exciting and overwhelming. Many are now scrambling to understand what this move could mean for future gains, how to properly position themselves, and whether now is the right time to buy, sell, or hold. Amidst all this, one thing is clear: the Iraqi dinar is back in the spotlight. Whether this leads to a full revaluation or simply sets the stage for broader monetary reform, today's news is the most substantial shift in IQD policy in years. It demonstrates that changes are underway, that discussions once confined to niche forums and private groups are beginning to intersect with official channels and real financial systems. It also underscores Iraq's growing desire to normalize its currency infrastructure in line with international expectations. Some sources close to Middle Eastern financial desks are suggesting that this could be part of a larger move by Iraq to modernize its fiscal framework. As the country continues to rebuild and integrate with regional partners, having a trusted, transparent, and unified currency system will be key. The universal acceptance of all note denominations could very well be the first brick laid in that foundation. For now, investors are watching closely. Updates are expected in the coming hours and days, and all eyes are on the Central Bank of Iraq for clarification. The possibility of an official press release or further policy guidance remains on the table, and anticipation is building. Meanwhile, global currency markets are beginning to price in the news, with slight shifts in exchange activity and growing interest in emerging market currencies. What comes next remains to be seen. But for IQD holders, some of whom have waited for over a decade, this moment is being cherished as a breakthrough. Whether this is the beginning of a long-awaited financial transformation or simply a strategic move to clean up Iraq's internal monetary operations, one fact remains undeniable: the world is paying attention. And for a currency that has long existed in the shadows of speculation and silence, that is already a significant step forward. As the story develops, we will continue to monitor every detail. For now, IQD holders have reason to celebrate, and the world waits with cautious anticipation to see what happens next.